Wow. That's all I can say about the interview that we just had with our friend Rod Khleif. He brought some knowledge bombs, some experience bombs, a little bit of everything to the mix today. And all I can say is you guys do not want to miss this episode with Rod. He has led an incredible life. He's transformed himself into the person he is today, and he's got a lot of great experiences to share. Patrick, man, that was a lot for us to take in. Just an hour worth of time with Rod. What would you come away with from that conversation?
I think one of the biggest things I came away with from the conversation with him, it was literally just to decide, commit, take action like we tell you guys to do every day. When James and I started this podcast, there was no chance in hell I ever thought that we would be interviewing Rod Khleif, let alone getting to spend an hour of his time helping you guys out. So make sure to listen to the end. He drops you a bunch of free codes to get some discounts on his courses, on his books, on his seminar that's coming up. I think James and I might go. He did offer it up to us, so we might have to take him up on that. But definitely listen to the end. You guys are going to love this one. And here it is. How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
Going well, Patrick. Thank you for that warm introduction. I'm very excited about today's podcast. We've got a guest with us who needs no introduction, and we're going to get a great background story with him. He's going to tell us a little bit about his real estate deals, life, psychology, mindset. So without further ado, let me introduce Rod Khleif. Rod, why don't you go ahead and get started with our listeners by just telling us a little bit about your background and a little bit about your life story.
You bet. No, let's have some fun today. And so is it real AF? Is that, I'm sorry, I'm sure you've heard that joke about 1,000 times, but
we try to keep it real AF. So
I love it. Well, so listen, I'm going to go way back because it'll lend some credibility and some framework to what we're going to talk about. So I'm a Dutch immigrant. I was born in the Netherlands, wooden shoes and windmills, and immigrated to this country when I was 6 years old with my brother Albert, my mother's Vansha. And we ended up in Denver, Colorado, and we didn't have much when we got here. In fact, we really struggled. And my mom, babysat kids so we'd have enough money to eat. And I remember, we ate expired food. There was actually an expired food store, believe it or not, that we bought food at. We drank powdered milk with our cereal in the morning because it was cheaper than real milk. And trust me, it sounds better than it is. And I remember wearing clothes from the Goodwill and the Salvation Army all the way through junior high school till finally I got disgusted when I was 14 and I was tall and I lied about my age at Burger King and got a job flipping burgers so I could buy my own clothes. And I'm sure you've got listeners that had it harder than I did, but I knew I wanted more. And like I said, my mom had an incredible work ethic. So she babysat those kids so we'd have enough money to eat. And with her babysitting money, she was an entrepreneur. She actually invested in the stock market successfully, in IPOs, no formal education, and also invested in real estate. Well, her first real estate acquisition was the house right across the street from us. When I was about 14. She told me she paid $30,000 for it, and directly across the street from a family named the Jewels. And then when I was 17, she told me she'd made $20,000 in her sleep that had gone up in value 20 grand. And I'm like, what? You made 20 grand and you didn't do anything? Screw college, I'm getting into real estate. So I went out and got my real estate broker's license right when I turned 18, which you could do back then with education. I could actually have my own office. Thank God I was smart enough not to do that. I went and worked for another broker, but now to be a broker, you have to have some experience. They got smart. But anyway, so I was going to be rich in real estate. Well, my first year in real estate, I made about 8 grand. My second year, maybe 10 grand. But my third year, I made over $100,000. So what happened between year 2 and year 3 that caused me to 10x my income? Well, what happened was I was dating a girl, and her dad is who I worked for. It was the broker. His name was Gino. And Gino taught me about the importance of mindset and psychology, and how really 80 to 90% of your success in anything is just that, your mindset and psychology. Only 10 to 20% is the stuff we talk about on our podcast, the technical real estate points. It really is the do, and it's the keep doing. It's the pushing through fear. It's the, pushing through limiting beliefs. It's the getting uncomfortable. And so fast forward to today, I've owned 2,000 houses that I've rented long-term in 3 states. And I now own thousands of apartment units. In 2006, my net worth went up $17 million while I slept. And you might say, wow. And I said, wow. And I thought I was a freaking real estate god. I could do no wrong. I got a head so big I could barely fit it through a door. And when that happens, maybe God or the universe, whatever you believe, will give you a nice little smackdown. Well, that was 2008. In 2008 and 2009, I lost $50 million conservatively. And So what I'm known for talking about on my podcast and at my live events and so on and so forth is really the mindset it took to have 50 million to lose in the first place. And probably more importantly, the mindset it took to recover and get it back. And so, I'm happy to drill down on that with you guys if you like.
Yeah, no, I totally think that, and I totally think that our listeners are going to absolutely love that, because like you said, you had to have the mindset in the first place to even get the 50 million to lose. And then what it was like to take, those lumps on the chin, have that head deflate a little bit, and then rebuild that portfolio after one of the greatest financial crises of at least James and I's lifetime. You're
just wait. It could be coming again. Well, let's hope it's not that bad. But Trump says it could be as bad as the Great Depression. Love him or hate him, but it still remains to be seen. Elon Musk said the crash is going to be bigger than you think. They're lying to you. That's a direct quote. So who knows? But yeah, it sucked. To be honest, it was no fun, But yeah, so let me tell you what I did, because I get asked all the time, how did you recover from losing 50 million bucks? And I haven't met somebody that's lost as much as I have. I met somebody on an interview that claims he had, but when I really dug deep, it wasn't his money. It was my money that I lost. But anyway, so the first thing I did, which is really the first thing I do at my boot camps, is I reassociated with my goals. Okay, I got very clear on what I wanted again and why I wanted it. And really that is the first step for anything. Like I say, if you come to one of my boot camps, the first thing we do is goal setting on steroids. Because how do you get anything if you don't know what it is? You got to know what it is you want and why you want it, right? You got to create what Napoleon Hill calls a burning desire. That's in his book, Think and Grow Rich. And you've got to have that to push through that fear, to push through those limiting beliefs, and really to get uncomfortable. The comfort zone's a nice warm place and nothing freaking grows there. In fact, I just got a cold plunge that I've been loving. I'm in there every day now. It's set at 50 degrees. I'm in there for 5 minutes and it's uncomfortable. But really, Tony Robbins has got this quote that the quality of your life is in direct proportion to the amount of discomfort you can live with. And so I want to make myself uncomfortable. But anyway, so it starts with the goals. You've got to have those. And so, that's, like I say, that's the first thing we do. And by the way, let me just mention this to you. If here's the sad reality. People spend more time planning a freaking birthday party than they do designing their lives. Doing your goals is designing your life. Now, if you're in your car, write this down, rodslinks.com. Because at the bottom of that link tree is my goal setting workshop. I do it every year on New Year's Day or the day after. And there's a guide you can download. I'm not going to try to sell you anything. Go there and do your freaking goals. Have your spouse do your goals. If you got a kid that's over 10 years old, have them do it. So powerful. It's done here in the studio. It's music. It's powerful. And it'll just set you off. And, it's something you should frankly do 2 or 3 times a year minimum. And so again, rodslinks.com. And if you're driving, text the word links to 72345, and that'll take you there, and go down there and do those goals. Super powerful. So it starts with that. That's how you have the drive to push through the fear, and we talked about limiting beliefs. Let me share something with you. I've got the props right here, actually. Hang on. So when I immigrated, my mom, I didn't speak English and I got thrown into school, and I discovered what bullies were for the first time. Okay. And got my ass kicked occasionally. And then my mom thought it'd be a great idea to send me to school in these wooden shoes. These are the actual freaking wooden shoes. We found them when my mom went to assisted living. And dad, insult to injury, these leather shorts the Germans wear for Oktoberfest. These are the actual shorts too. And so I got my butt kicked again, as you can imagine. And then I had bullies that lived at the end of my street, and she'd chase them off with a fly swatter. So the next day, butt kicking. And the reason I bring this up is it created a limiting belief for me. And it was that I wasn't good enough. And I used to ask myself, how can I show them I'm good enough? Okay. And of course, presupposed I wasn't. And a lot of people have these limiting belief systems. I'm not good enough. I'm not smart enough. I'm not strong enough. I'm not analytical enough. That's another one of mine. I don't have enough money. I don't have enough time, and there's a reason the acronym for belief systems is BS, because 99% of them are just that. They're BS, but we believe they're real. And so if you're listening and you're consciously aware of one of these limiting beliefs, it's, sorry, turn my phone off here. Okay. if you're consciously aware of one of these limiting beliefs, drag it out in the daylight, okay? Look at it with your adult rational mind and recognize that it's BS, because 99.9% of the time they are. They're just something that happened in your past that you think is real and it's not. And so, that's how you diminish it. I mean, I used to be afraid to raise my hand in class or anything like that. Now I speak in front of literally thousands of people a year, typically in flip-flops. Okay. It's just, there's a lot of freedom in becoming more and more free from the opinion of others. And that's, so anyway, if you've got one of those, that's what you do. And so do your goals. The next step is you really have to make a decision. And when I say a decision, I don't mean dipping your freaking toe in the water. I don't mean 1 foot in, 1 foot out, kind of thinking about it. No, when you make that decision, it is done. Okay, that's a decision. The Latin root for the word decision means to cut off. If you're going to attack the island in battle, you're going to burn your ships because you're taking their damn ships home. That's a decision. Okay. And it could be the biggest decision of your life. It could be the decision to take action in this business, to get involved. I think there's incredible opportunity coming. We'll talk about that before we cut loose today, about, really my opinion on what's coming. I think especially in commercial real estate, I think it's a train headed for a brick wall, and I'll explain why. But you've got to make that decision. And I think there's going to be incredible opportunity because of that. Everything's going to go on sale. There'll be opportunity to buy businesses, other real estate asset classes, of course, certainly multifamily. But you got to decide. So that's number one. Then the next thing is you got to take that first step. And sometimes that first step can be the hardest step of your life and the most important step of your life. And I see it with my students all the time. I kind of call it the law of the first deal. They're complaining it's been 4 months, 6 months, even a year sometimes before they get their first deal. Then they get one, and the next thing I know, they have 3. I'm like, what just happened? And it's that first deal. It's the scariest. It takes the longest. It's the most stressful. And then once it's done, it's like, is that all there is? But you got to take that first step. Dr. Martin Luther King said, you take that first step in faith and the next step will be revealed, right? Lao Tzu, thousands of years ago, said the journey of 1,000 miles begins with a single step, but you got to take it. And there are a lot of people, especially in the multifamily game, that are analytical. And you know who you are, you're listening, you know who you are, and you got to check off every single box before you make a move. And listen, I love you. And typically, if you're analytical, you can be very successful in my business in multifamily, but you got to make a move. Okay. You may not see the entire path before you make that move. In fact, a great analogy for you, if this is you and you know who you are, is just imagine driving across the United States at night. Your headlight only sees 50 to 60 feet in front of you, but you can make it. Other people have made it before you. Now you may have some obstacles, but it can be done. It's the same way with the multifamily business or pretty much any business that you set your mind to, but you got to you can't wait and check off every single box before you make a move. You got to take that first step. So that's the next piece. You guys just interrupt
I want
me
to
at
chime in
any
real
point.
quick. Yeah.
Okay. Yeah, please.
I really wanted to chime in there on that because, James and I are wearing the hats, decide, commit, take action. You have to decide that you want to do something, right? And then that second one is the commitment. And that's usually the first step, is just committing that you're going to do that something.
If you're not committed, you're going to get knocked off track. If you're committed, you're like a freaking train on a track. You have to absolutely commit. Love it.
Exactly.
Yeah.
You have to commit. And by listening to this podcast, by getting that information, you've decided that you wanted to do something. You are taking that commitment, but it's doing that next step, which I know you're going to get into. And I think part of listening to these podcasts is preparing you for that next step. It's getting your mind right with being able to know, like you just said. I love that analogy about, your headlights can only go so far in front of you, but the road's there. You're gonna get past those obstacles if they power through. And James, what do you think, James?
Yeah, I mean, I agree 100%. I'm down to keep hearing what Rod's got to say. So, Rod, continue, man.
All right. Well, Listen, I love the fact you brought up commitment because I forgot to, and I usually do. So when you make that decision, you're fully committed. And so I love that's on your hat. I forgot that's on your hat. So I asked you guys and I forgot, but you're right. And then it's really not the next step. It's very often the first step. And that is just to make a move. Okay. Is just once you've decided, just go do it, and that's the only way it's going to happen. And so many people get out of their fear and their limiting beliefs or the comfort. They're comfortable. They never take that first step. And it's sad. I will tell you, a lot of people fear failure. And I'm going to tell you, instead of failure, fear regret. Okay. There's this nurse in Australia that was a hospice nurse. So she took care of patients when they were about to die. And she asked them a question, guys. And the question was, do you have any regrets? And she wrote a book about it. It's called something like The 5 Regrets of Dying. You know what the number one regret was? Not living the life I could have lived, living someone else's life, not doing what I know I'm capable of. I can't think of anything worse than that. Failure, don't worry about failure. We fail our way to success. I call them seminars. That was a $50 million seminar. It was an expensive freaking seminar. Don't get me wrong, but that's what it was. And it's interesting. I'm an entrepreneur. I'm a serial entrepreneur. A couple of years ago, I realized that I've started 27 businesses in my career so far. You name it, I've done it. And several worth tens of millions of dollars. 2 of them right now are. But most were spectacular, flaming seminars, okay? And that's okay. If you fail, you're not a failure. The vehicle you were trying is a failure. And that's what I'm gonna tell you. If you're listening, pick your freaking vehicle right now because it's coming. And if you're up to speed in time, you're gonna be able to capitalize on it because whenever there's a crisis, there's always incredible opportunity. And opportunity is knocking down the door right now, but you gotta get up to speed. Do you mind if I mention my boot camp real quick?
Please do.
Of course.
Okay, yeah. So I've got a 3-day boot camp coming up in Orlando about multifamily. If you have any interest in multifamily, by God, get your butt there. I'm going to give you a code. You can come for $197. That's it. And it's not a sales pitch, okay? So 3 days of training. It's not a big sales pitch. I talk about my coaching for about 30 minutes. The rest of the time is all drinking through a fire hose. Here's what you do. When you go to Rod's links, I mentioned this earlier, at the top is the boot camp website. That's my link tree. But remember when you check out to use the code REAL, okay, REAL, okay? Use that code and you come for $197. And again, I go through every aspect of this business, picking your team members, finding a market, evaluating the market, finding deals, evaluating deals, financing deals, raising money for those deals, syndicating them, joint venturing them, managing them, and on and on and on. And of course, I spend time on mindset. I'll brag for a minute. My students, my coaching students now own upwards of 170,000 units that we know of. And I've only been teaching 5 years. I'm super proud of that. And so I'm sure it's many more than that. Doesn't even count the boot camp participants, tens of thousands of units they own. But it's because I'd spent time on mindset there as well. And so, yeah, again, if you can come, go to rodslinks.com. Remember when you check out to use the code REAL, REAL, and you come for $197. And if you don't love the event, I'll give you your money back. I don't mean like it. I mean freaking love it. I'll give you your money back, okay?
It's
never
like
happened,
but
there's
can't be passed up on. I love that, Rod. I appreciate that.
Thank
I know
you.
our listeners should definitely take advantage of that. Go ahead and sign up, guys. Make the trip. It'll be worth it. And that's all comes back to what we're talking about. You got to take a step, take action.
You got to take action. And here's the thing, what you learn in multifamily is it's a team sport. It's not something, you're not going to do larger multifamily properties on your own. Patrick, I know you've done some smaller multi stuff, but you get into the 100 unit, 50 unit, 60 unit, well, even 30, 40 unit, you're going to have other people on the team helping you raise money and so on and so forth. And there'll be upwards of 1,000 people there. So a lot of people meet their teams at my event. So anyway, what was I talking about before I derailed?
I'll get us back on a track, Rod. Why don't you give us some tips for, with everyone that you've come across in your career, in your path, for destroying limiting beliefs? Like, what are some actionable things that people can do to get past that hurdle and build that momentum?
Great question.
Change that.
I've never been asked that question.
Down.
Yeah, I'm sorry to interrupt. I'm notorious for it. I have a 4.5-star review on my podcast because I interrupt people and people hate it, and I apologize. And it's just my brain
Ron, you got a lot to say, so we're trying to get it out.
Yeah,
let's do it.
Yeah. Anyway, by the way, I hope you'll check out my podcast when you go to Rod's links. I'm blessed to say it's the largest commercial real estate podcast now in the world. We're about to hit 17 million downloads, and very, very proud of it. But I've never been asked that question before, James. So I really appreciate that. Is how you destroy limiting belief. And I'm going to tell you what you have to do is you have to look at it rationally. I mean, when I was in school, I'll tell you, it wasn't just the bullies. I had an experience that I don't talk about this as much either. I was on the playground once. I was about 9 years old, and I had this crush on this girl. Her name was Carolyn, and I thought she was the most beautiful thing I'd ever seen. Of course, I'd never spoken to her, but I made the mistake of telling my friend Becky Grills that I had a crush on Carolyn. And so she told her, and I'm on the playground skipping around because think I'm in love, and I see Carolyn coming towards me with what felt like half the school. It's probably only about 15, 16 kids, but it was a lot. And she comes right up to me. She says, "Do you like mustard?" And of course, I just said yes to anything. And I'm like, "Yeah, I like mustard." She goes, "Well, I hate mustard and I hate you." And everybody laughed and walked away. Doesn't sound like much, but that stupidity, that insecure girl, and caused me, like I say, that and the bullies caused me to think I wasn't good enough. And so what you have to do if something like that has happened to you, again, is look at it rationally, okay? Those bullies, again, were just insecure freaking kids. That's it. That's what it was. Anybody that doesn't love me or like me just doesn't know me. And I had to come to that realization. And if they reject me, they either don't know me or they've got their own shit going on, okay? It's on them, okay? And I had to come to that realization. I'm a freaking gift from God. I am, just like you guys are, and anybody is a gift from God. And you realize that, but here's the secret. When it pops up, if you're consciously aware of it, sometimes you're not, but if you're consciously aware of it, you've got to stop and consciously think about it. Don't let it pass by. Think about it and recognize it's BS and replace it with something empowering. Okay, like I'm a gift from God, for example, whatever the limiting belief is. But the key is to consciously pull it out and look at it. And you do that enough times, it will diminish and ultimately go away. That's the secret to getting rid of a limiting belief. So let's see. The next piece here, let's talk about in multifamily, it is critical that you play to your strengths. Okay, your strengths are your greatest assets. Don't try to build your weaknesses. There are a lot of different hats you can wear in multifamily. You could be the mouthpiece like me. You're out there building relationships with, like you guys as well, relationships with investors and brokers and sellers and partners and so on and so forth. Or maybe you're the analytical one. You love spreadsheets. That's something you have to do in this business as well. Or maybe you like processes, you like management, maybe you've got construction experience or project management experience. You could be great at asset management. So that's another hat you can wear. So lots of hats you can wear, but the key is to play to your strengths. Why? Because if you're playing to your strengths, you're going to love what you're doing, right? And you're going to be good at it, right? And if you're playing to your strengths, speed bumps in the road aren't as impactful, and you're able to recover from stuff that pops up in front of you much faster. And you're able, if you're playing in your strengths, you're in the zone and you're able to innovate better. You're more creative. It's just, you definitely want to play to your strengths. And then, like I say, and then hire a line or partner for your weaknesses. That is a recipe for success. Okay. When I interview, and I've interviewed hundreds of operators on my podcast, very often, the most often thing I see is an analytical person with an outgoing person. And those are matches made in heaven. But you want to play to your strengths. The other reason you want to play to your strengths is you never work another day in your life because you love what you're doing. I mean, I've got a supermodel, beautiful wife over in the other building here in my compound. I'm here with you guys, in the evening at dinner time, having this conversation with you. And I don't say that lightly. She's freaking spectacularly beautiful, and she's more beautiful on the inside than the outside because I freaking love doing this. So I absolutely love it. And so the other piece is, if you love what you do, you're going to be passionate about it, okay? And in this business, in any business, frankly, you have to influence people. And if you're passionate, it's going to be much easier because they can feel that passion. They can tell you believe in it and you love it and you're able to influence people. So again, play to your strengths, super important. The next piece, and just interrupt me if you need to, the next piece is peer group, okay? I will tell you, when I was losing everything in 2008 and 9, I was actually in Tony Robbins' Platinum Partnership, okay, which was at the time like 130 grand all in. It's more than that now. But I was around people that were killing it in that crash, okay? They were thriving in 2008 and 9. And they're like, get up, you puss, 50 million schmillion, get up and make something happen. Is that who you want to be around when the you-know-what hits the fan? You better believe it, right? And I'm going to tell you, especially in what's coming, be very careful who you share your dreams with. You know, if you're thinking about getting into real estate, when you first start thinking about it, it's this fragile thread, and it's easy for that thread to be broken. And so, you know, because people around you, here's the problem. Most people default to peers that they went to school with or they work with. And very often those people have their own fears and limiting beliefs, and fear that they're going to lose you if you succeed, fear they're going to be humiliated if you succeed, fear, you know, their own fears of failure, and so on and so forth. And sometimes it's family. I will tell you, love your family, but choose your peers proactively. Get around people that want more out of life. Go to local meetup groups, or, you know, it's why my warriors, my coaching students are so freaking successful. Those 170,000 plus units were done between warriors. And you know, in that group every day, almost somebody's closed on a deal and everybody's praising them and congratulating them and helping them. And that's who you want to be around. Your peer group is incredible. You show me your 3 best friends, I'll show you who you are. Every aspect of your life, your health, your happiness, definitely your finances. And so choose wisely, especially in what's coming, okay? Because there's going to be a lot of fear. The news is going to make it seem much worse than it is, and it could become really bad, okay? So peer group is critical. And let's talk about focus for a minute. If you're listening or watching this podcast, you're a leader. There's no question you're a leader. And I'm going to tell you, in what's coming, the world's going to need leaders, okay? And as a leader, it is critical you pay attention to your focus, okay? It's very easy. Don't get me started on the crap that's on the news. Recognize that the news, they're not public service organizations. They are for-profit organizations. And most of the stuff on there is crap anyway. I mean, you don't even know what to believe anymore, honestly, between the news and social media. It's like, what do you believe? And so as a leader, stand guard at the door to your mind. Bring in the good stuff, okay? Be very careful not to get too sucked in. I get sucked into some of that political crap, and you know, my blood pressure goes up 20, 30 points. I'm like, you know, why am I doing this to myself? Because it's not something I can do anything about. But be careful of that, because, you know, especially moving into this time, this market cycle that we're going into, okay? Because it's going to be very easy to be fearful, and fear paralyzes, okay? So it's critical that you stay focused, and that's why the goals are so important, that you keep those in your mind's eye. I do these clips in my podcast every week called Own Your Power. They're motivational clips. I know this is why the show's been so successful. People don't remember what you said, but they remember how you made them feel, and these will make you feel. There's music, and you give me 5 minutes a week, I'll juice you, okay? So I hope you'll check it out. But anyway, so your peer group, so let's talk about focus a little more. You know, the most successful people on the planet have the highest degree of focus, and focus is clarity, and focus is power. And you know, and very often we dilute our focus. I don't know about you guys, but I'll sit in there watching Netflix and I'll be scrolling through social media. Kills your focus, because your brain's making these little micro decisions every split second, and you know, it's just too much. And so I listen to 2 podcasts. I listen to Joe Rogan and Tim Ferriss. I try to get both sides of the aisle, okay? I try to stay balanced. I mean, I'm definitely on one side in a big way, but I try to stay balanced, just to try to keep some balance. And Tim Ferriss's show, he interviews the best of the best on the planet in the different walks of life, like the best athletes, NFL, NBA players, Michael Phelps, swimmer, billionaires like Ray Dalio, CEOs of the biggest companies in the world, Zuckerberg, actors like Jamie Foxx, Ed Norton, Hugh Jackman, Arnold. And I started to hear a pattern. Almost all of them meditate. What does meditation enhance? Focus, right? Focus is super important. And I'm going to tell you, whatever you focus on gets larger. This is why it's so important, both positive or negative, okay? And if you're sucked into the news, that's what's going to get bigger. If you're focused on your goals and progressing in life, that's what's going to get bigger. You know, they asked Mother Teresa if she was anti-war. She said, no, I'm pro-peace. Right?
Exactly.
You know, I get people that call me and say, I need to get out of student loan debt. I'm like, wrong statement. You need to make so much freaking money, the debt's irrelevant. Okay, because what you focus on gets bigger. So focus is another super important one. I
absolutely love that. I love that, and I find that I focus the best on what I need when I cut the grass. I have about 2 acres that gives me about an hour and a half time frame. And that's when I really have the time where nothing else is going on. There's a loud motor. I'm in my head. I'm listening to music, or
Love
I'm
it.
listening to a podcast or a book. And that's the time when like my greatest ideas and focus about my business and where I'm headed come from, because that's the only real time during the week where it's just me and there's no TV, there's nothing else going on. And I find that's when I kind of have my peace, you know? So for me, I could afford to have someone do it for me, but I choose not to, because that gives me my time
It's
during the
almost
week.
meditative, isn't it?
Focus.
It's almost like
It is.
meditation yourself. Yeah, I mean, it really is. You know, sometimes I'll be floating in a pool and that'll happen, or sometimes even on an airplane, you know, where you're removed from everything and you can really just sit and think. Yeah, I love it. A great example. Let's see. What haven't I talked about?
Rod, I do got a
well,
question for you.
yeah.
Yeah, I want you to look at yourself pre-2008, pre-financial crisis, and look at yourself today. It sounds like you've gone through quite the transformation. Those two people are probably very different people. You know, can you describe for our listeners like how you changed after that whole process of making all the wealth that you had, losing it, and where you are today, going through all the psychological and meditative changes that you went through? Like, how are you a different person today?
That's another really good question. That's two I've never been asked before, brother. I'm impressed. I will tell you, the biggest change was I've become so much more conservative, almost to a fault. Okay. I've only bought 2 assets this last year. And they're both screaming freaking deals. I mean, 50-50 splits on the back end. I mean, which, you know, most operators are at 70-30 or 80-20 with their investors. And I mean, they were that good. I could do 50-50, but I know I've missed out on opportunities. So that's probably the biggest change. I mean, when you lose 50 million, you know, it's like, you know, hit me once, shame on you. Hit me twice, it's Rod's fault. So Rod's going to be more careful than anybody out there. But you know, that's probably the biggest change. The drive is still there. The enthusiasm's still there. The love of real estate's still there. You know, of course, I'm much more knowledgeable. I mean, I can sense things now. I'm much more able to identify people I should be careful with. You know, that's something I'll talk about for a second. You know, because multifamily is a team sport, you're going to likely get into a partnership, and partnerships are easy to get out into, like a marriage, and hard to get out of, right? And if you go to Rod's links, I've got a guide there on questions you should ask before you get into a partnership. So again, rodslinks.com, there's a lot of free books there, a lot of free resources, and one of them is that partnership book. But the reason I brought this up is, you know, one of the things there is to trust your gut, trust your intuition. And my intuition has really become honed over the years. And so, you know, even after the crash, you know, your brain is so powerful that when you meet somebody, if something doesn't feel right, you have to trust it, because, you know, your brain is picking up on these micro nuances that you're not even consciously aware of. They're subconscious, but your brain is that powerful. A great example of this is the book called Blink. I think it's Pressman, but where an art expert, like the best in the world, can look at a painting and they know it's a fraud, but they don't know why they know it's a fraud. Okay, that's an example of it. And it's the same way when you meet somebody. If something doesn't feel right, freaking trust it, because your brain is picking up on something. And I will tell you, every time I've ignored it, I've regretted it. So, and I don't know why I went down that side road in answer to your question, but really that's the biggest change, was just my becoming much more conservative. And, you know, like since then, I've only done two or three businesses, where I did 24 prior to then. Okay. You know, I did carpet cleaning, satellite machine, ice cream, yogurt shops, you name it, gold buying, business after business after business. And now I've, you know, I do my thought leadership. You know, I coach. I never planned to coach. In fact, if you listen to early episodes of my podcast, I say, I'll never sell you anything. I just want to add value. Now I'm a freaking liar because I sell everything, but I never planned to. You know, you want to make God laugh, you tell him your plans, right? I hit 1 million downloads. I'm like, you know what, knucklehead, you probably ought to do something with this. And so I wrote a book. I wrote this book, actually, How to Create Lifetime Cash Flow Through Multifamily Properties. I gave away 20,000 copies for free as a lead magnet. I still give it away for free. You can pay $6 at Rod's Links and you get the physical copy, and people rave about it. They say it's fantastic. I've never had even a critical comment on this book, but yeah. And then I started doing coaching and stuff like that. And I absolutely freaking love it. I mean, I love it. We're changing lives. And I'm sure you guys love it too. I'm sure you get a lot of positive feedback from people that have, you know, you've added value to through the podcast, right?
We have. And
Yeah.
what's very interesting now is we're at a point where we're starting to have listeners come on to the podcast that started along the journey with us. And
Oh,
now
that's
we're
cool.
interviewing them about their journey. So it's really, it is all about adding that value and trying to help as many people as possible, because selfishly, because we started this podcast, we get to sit here and talk to guys like you and spend an hour, plus of your time to help our listeners out by something that James and I have dedicated our time to, and with
That's cool.
really no monetary gain or really anything that we really planned. It was just, hey, let's do this together. And now we absolutely love it. So
That's very impressive. And that, I asked you that before we started recording, what are you doing to monetize this? Are you looking for investors, blah, blah, blah. And I was very impressed with your answer. The fact that you're just doing this to have conversations, meet people, add value. It's a beautiful thing. And I will tell you, that's why you'll be incredible. That's why you're already successful, but that's why you guys will just be extraordinary successes, because, what you give, you receive. But why don't we take a minute and talk about where I feel like we're headed, why I think we're headed into some serious pain. You want me to chat about that for a minute?
You just read our
I want to
mind.
pull that out of you, Rod. Like, I'm so curious to hear your thoughts. Like, I want to know why are we where we are and where are we going from here? So let's get into it.
You got it. So I've got a couple notes here because I did a Facebook Live not long ago. But here's the problem, okay? One of the biggest problems is the commercial real estate market where it's at right now. And I've got this copy of Forbes, and it talks about occupancies in the biggest cities in the country. And the average is 70% for office, okay? 70%. Like San Francisco, 67%. These assets don't break even unless they're at like 90%, okay? So these are, what is it, $500 billion or more dollars that are going back to banks. And most of these commercial real estate loans are held by small and regional banks. So I'm going to tell you, we're going to see some serious bank failures, guys, unless the Fed steps in and props it up some more with $1 trillion in support, which of course will ramp inflation even more. But 6 major cities average about 70% occupied on office debt. So that's one big thing. And already there's been billions, tens of billions of dollars worth of assets that have already gone back to lenders. Okay, so that's in this issue of Forbes. What month is this? No, it's very recent. Anyway, so there's that. Here's the thing. The other thing is a lot of operators these last 2 or 3 years use bridge debt, okay, to buy assets. And they use bridge debt because they got a higher loan to value. Fannie Mae and Freddie Mac, they're not stupid. They've been around forever. And they're at 65.
For our listeners out there that aren't as well versed in large multifamily, can you just give a quick synopsis of bridge debt for those that may not?
Sure. Bridge debt, here's real simple. If you ever borrow hard money for a single family, this is the commercial version of hard money for a single family, bridge debt. Now, technically, it's supposed to bridge the gap from an asset that's not performing, like it's under 90% occupied, to an asset you stabilize, and then you get permanent financing from Fannie Mae and Freddie Mac, okay? And of course, we go into all this in great detail at my boot camp. But bridge debt, why it's so scary is because it's short term. Number one, typically 1 to 3 years. It's adjustable rate. Okay, we all know what's happened with the interest rates, and we have 1.6 trillion in commercial debt coming due by the end of next year. Okay, 1.6 trillion. And if you ever want to get freaked out, look at a graphical example of the difference between a million, a billion, and a trillion. It'll blow your mind. A trillion is it's insane how much it is. Okay,
1,000 billion.
Right. Okay. So yeah, and I mean, just if you look at it graphically, that's when it'll really blow your mind. So here's the thing. That debt is all coming due, and those people have two options: either sell or refinance. Well, sales are down 75% year over year, first quarter this year. So stuff is not selling at all like it used to. So that's their sales. Refinance is a challenge because the interest rates. And so these people that have bridge debt, their payments have gone through the roof, even if they have a rate cap. Okay. So a 2% increase, it's typically you buy like a 2 or 3% rate cap. Okay. That keeps the rate from going up over the period of time you have the loan more than whatever that cap is. It's not going to go more than 2% or 3%, right? Well, even a 2% increase in a multi-million-dollar loan is a huge increase in your payment. Okay, so that's point number one. Point number two is If you wanted a 3-year 3% rate cap in 2020 for a $100 million loan, I'm just going to use this as an example. 3 years, it wouldn't go up more than 3% over a 3-year period, 100 million. That was $23,000 in 2020. That same rate cap today for 1 year, forget 3 year, you never get 3 year. That for 1 year is 2.3 million. Okay. So all of these people that can't sell have to refinance. They're going to have to get bridge again because their debt service coverage ratio is gone, is not, it's not covering the debt anymore. In commercial real estate, the lenders look at the property's ability to service the debt, not yours. They don't care what your debt to income is. They want to know the property is going to service the debt. And that's called a debt service coverage ratio. And an example of this is, let's say and this is an annual calculation. Let's say that you have a property that cash flows $125,000 a year. That's the net income, net operating income, $125,000. And let's say the debt is $100,000. So $125,000 income, $100,000 in debt. That's a 1.25% debt service coverage ratio. Now, if that payment has gone up, that debt service coverage ratio has gone down, right? And a lot of people are struggling because these properties aren't cash flowing. Now, so that's problem number one. So they're going to have to put money in because commercial real estate's valued on a multiple of the net income. It's called the NOI. It's the cap rate is the calculation into the net income. And it's any increase to that net income is an exponential increase to the value. And I'm kind of going into the weeds here a little bit, but
I love this. Are we also getting into, are we also having like a triple effect here with cap rates increasing?
Yes,
as well.
That's the other problem. So values are going down with cap rates. The cap rate goes up, the values go down. It's counterintuitive. Okay, so that's a problem. The net income is decreased. That's a problem. So these operators are going to have to put a ton of money in just to be able to get to a point where they can refinance. Number one. Then they've got the rate cap on top of that. Number two, I mean, it's debilitating. And so a lot of operators are going to have to do what's called capital calls. They'll go to their private investors and say, hey, I need more money. And a lot of investors won't do it. So you're going to see a lot of properties going back to lenders. And in fact, the Fed just did an announcement that they're pushing lenders to work with credit-worthy borrowers to not, to be more flexible, okay? Because the Fed sees it coming. But there's going to be a lot of situations where it's unavoidable. And so listen, I'm not trying to scare you. The shit is going to hit the fan. I'm not trying to scare you. There will be incredible opportunity. In 2008 and 9, I got crushed by the wave. I was hiding under a rock because I had my butt handed to me. This time I'm surfing that bad boy, okay? And I'm telling you, it's coming. And if you get up to speed, if you wanted to learn multifamily, get your butt to my boot camp, but it will pick your vehicle. Buying businesses. I think there's going to be incredible opportunity to buy businesses. Certainly any asset class in real estate. Stay away from office. Probably even stay away from retail right now. But, self-storage is awesome. Mobile home parks are awesome. Single family is awesome. But, here's another quote. Buffett is preparing for a market downturn. Here's another one. This is in Forbes. Expect layoffs at 51% of the U.S. companies, according to a new survey. Here's another one. More than 20 million U.S. households 20 million U.S. households are behind on their utility bills. Okay. These are all headlines in the last few months. Okay. So again, not trying to scare you, just get ready. Don't be scared. Figure out how you're going to capitalize on what's coming because it's coming. Okay. So that's my opinion.
How do you feel right now about seller financing, owner financing during this current time? Fantastic option. Not just that. I mean, you're going to see a lot more of that. You're going to see a lot of loan assumptions where you got to bring more money to the table. Because a year ago, we bought 2 assets in the last year. One was a year and a half ago, San Antonio, 296 units, interest rates 3%, like 3.1, 3.2%. We closed on asset in Nashville, 145 units, interest rates 5.4%. Numbers still fantastic, but you can assume loans in the 3% range. You're going to put a lot more money into them, but seller financing is going to be prevalent. Another thing is other types of creative seller involvement. Like maybe the seller stays in the deal for a part of it. They can stay in the deal for part of your equity. So you don't have to raise as much equity. Seller credits. I was going to say, or you have the seller
carry a second
note.
You bet.
Carry a second note to cover the difference between where the property makes sense with the current interest rates from the bank, with the idea of 3 to 5 years at the refinance, that seller
I would go longer than 5 years. I would go 5 to 7 years. I would not do anything 3 years right now because this thing could prolong. I think it could be ugly for a while. And so, like the two deals we did are 10-year debt. Okay, there's 10 years fixed for 10 years. So don't do any short-term debt right now. But again, don't get scared, okay? Don't get sucked into the news. The news in 2008 and 9 said it wouldn't recover for 10 years. Multifamily rents exceeded pre-crash levels in less than 3 years, okay? In that huge crash, okay? So, now we have a lot of different environment now than we did then. A lot of things are different. Labor, unemployment is still pretty good. Of course, you've seen a lot of tech layoffs. I mean, literally a couple 100,000 in tech layoffs, but employment is still good. But the writing is on the wall. There are companies that are continuing to lay off. So we'll see, and of course, here's the other thing, people are really struggling. Credit card debt has gone through the roof. People are using credit cards to pay normal household expenses. Is that a problem? You better freaking believe that's a problem. So, I think there's going to be a reckoning.
I don't think that you're, scaring our listeners. What I think you're doing is you're informing them of the possibility of what outcomes might be on the horizon. And I think that's a very important thing for people to appreciate and take recognition of, because you don't want to be going through your wealth building career just blind to the risks that are on the sidelines. And you definitely need to, be observant of that. But what are you doing personally? Like, what is Rod Khleif doing to prepare for that opportunity that might be down the road in the near future?
You're the analytical one, aren't you? Yeah, I could tell. These are fantastic questions, James. Really, I got to tell you, I don't typically throw praise around like that, but these are fantastic questions. So I'm doing a lot of things. I'm in a lot of cash right now, which is killing me. Although I have it at a fairly high interest savings place, and it's also one of these banks that I don't know if you've heard. They have these banks now that will spread the money across multiple banks to keep the amount in there under $250,000 at each bank, so you're covered by the FDIC. So I've got a few million with that, and I'm focusing on operations. Okay, right now the water's going out. You're going to see who's naked as far as this debt's concerned, but you're also going to see a lot of these new operators that have never dealt with a downturn. They've never dealt with people that can't pay their rent, or taking care of their tenants. And we are so freaking tight on that right now. Asset management is critical through what's coming. You got to keep your tenants happy and be very and really manage your occupancy and not let it drop too far, because people it can be harder to fill places up as things get worse and worse. I'm not buying any C-class assets right now. That demographic, C or D, there's A, B, C, and D. A is brand new, D is the hood. Stay out of the freaking hood. Ask me how I know, okay? Just stay out of it. I could give you lots of examples. But even C properties, that's working people, they're getting their asses handed to them right now with this inflation. I went to the grocery store and I never, typically my wife goes and I bought some stuff and I'm like, 150 freaking dollars. Are you kidding me? For 2 sacks of groceries? And I asked the clerk, I literally asked the clerk, how do people afford this? And she just shook her head. She said, I don't know. And I mean, it's crazy how what's happened with pricing and gas and everything else. And, I know why it's happened, but the impact is just astounding. And that's killing a lot of people. They're really struggling. And so, be very, very careful with CC minus assets or worse right now. So I'm focused on quality right now, just because that demographic, A and B demographics, not getting hurt as bad. They can sustain, these increased costs. So, but those two things, really focusing on operations, getting a lot of cash. I have access to a lot of cash. I've just created an opportunity fund to take advantage of, these opportunities that I think are coming. So those are the main things that I'm doing.
Well, let me ask you this. I've got a question. We talked a little bit about the commercial side of things and, how, expenses are going up, net cash flow is getting blown up for these operators and they're having to refinance into a terrible lending market.
Well, we didn't even talk about insurance. Insurance is killing people too. Forgive me. I forgot. I interrupted as I do. We didn't even talk about insurance. I mean, we've seen insurance like triple on properties. It kills your cash flow. Texas, you wouldn't think Texas has had a lot of storms. We won't even talk about Florida. I had 800,000, actually close to 1 million in damage here at my compound. compound where I'm doing this right now. I'm getting new roofs, new paint, new floors, all that. And so insurance as well. Sorry, I interrupted.
No,
Please
you're good.
continue.
I mean, I think I've heard that a couple of insurance companies might be in some hot water too, especially in the Florida coast.
Going out of business. Yeah.
Yeah, they bought all the treasuries that, pretty much bankrupted their balance sheets, and now they're, God forbid we have a hurricane that they have to pay out on. But anyways, where I was going with my question is, in order to kind of alleviate some of those financial struggles that these operators are facing, do you think that there is still a lot of room to move rents in this market, or do you think that the economy
rents have flatlined? Rents have flatlined in most markets. I have I think I texted it to one of my guys. I can hang on. I can look it up real quick. Just give me a second. But it was a CoStar report on projected rent projections. Yeah, here it is right here. So this is 2023 forecast rent growth by Metro. It's all 2 and 3%, 2%, 1%, 2%. Even Phoenix 1.5%. This is rent growth for 2023. So it's already way down. Okay, and these are the major metros, and a lot of rents in a lot of areas, rents are actually declining. And then Nashville, that Nashville market deal, we had to drop our rents. Rents are declining, and I mean that's not going to stay that way. There's a housing shortage, but short term it absolutely will. So and here that's a really good point, because I had a big operator. I'm a big time operator. He's quasi friend of mine. He said, "Hey, I'd love to have you in on this deal." I'm like, "Okay, send me your pro forma." Because when you do a pro forma when you buy one of these properties, so you can show your investors what you think is going to happen with the property. And he's got 7% rent growth year one, and then 5% every year after that. I'm like, are you freaking kidding me? I mean, we're projecting 0 year one and 3% after that. So organic rent growth I'm talking about here. So, a lot of operators, even a big name, initials GC, you know who I'm talking about. He projected 10% a year for 5 years. Okay. On one that I saw. I'm like, come on, man. I mean, I love him. He's been on the show a few times, but yeah.
I do have to ask, Rod. So with trying to keep that occupancy rate as high as possible right now, going into these next, 12 to 24 months, if not longer, I just read an article today that multifamily occupancy rates are down about 7%, hovering between the high 80s, low 90s. Have you built, are you starting
very
to...
geographically specific, just so you know, that is very geographically specific. There are markets that are low like that. There are markets that are killing it. So just like for example, San Antonio versus Nashville for me, because those are two that I'm managing right now that we
Understood.
Just bought,
But with that being said, as the occupancy rates soften a little bit, is that going to open you up to providing existing tenants maybe a rent decrease or anything
possibly
to kind of keep them there if they think about moving? Because we all know turnover
possibly
is killer.
Well, or guerrilla marketing to fill them up. I just got a sign approved today that's 3 feet by 6 feet, and I'm paying some kid to stand on the side of the road and lift it up and down that says newly remodeled 3 bedrooms with an arrow pointing to our asset. That's guerrilla marketing, man. That's guerrilla marketing 101. So we do what we have to do, period. Teardrop flags in front of the place and more flowers than normal and on and on and on. And paying attention to every step of the lease process. How many deals are we getting in the door? Okay. How quick are we responding to those deals? How many turn into tours? How many of those tours turn into applications? How many of those applications turn into leases? And measuring every single step there. That's called a KPI, key performance indicator, metric. And you're checking every one of those steps to see if there's any breakdowns, right? So that's the kind of stuff that you have to do in a market like this.
I love how you just got into goals, and goals is one of the subjects that James and I love to talk about with all of our guests. And given where you are at in your real estate investing journey and the types of things that, you're going after, what would you say are a couple of your goals that you have for the next 36 months during this, possible economic downturn, the opportunities that are coming? What is Rod looking to take advantage of, and what are some of the goals that you are going to be tracking?
I'll give you some of them. Some of them are very personal, but I have 5,000 more doors. Okay, in the next 24 months. That's a goal. Listen. That's shoot for the stars. If you hit the moon, you're still doing okay. Okay, that one is. And I want to get a place in Miami. I had a place in Miami before. My wife and I love it there, so that will probably happen in the next couple of months. I wrecked my Lamborghini. I'm thinking I may get another Lamborghini. Just thinking about that stupid shit like that. That is stupid stuff, you know. But honestly, I think for me, I mean, I'm 63 years old. I'm starting to look at life through a lifestyle filter, and I want to spend more time with my wife, and so that's a big piece. I've got literally, I'm doing 3 cruises between now and May. So you know, two in Italy, and one here in the Caribbean, and so you know, I'm one big goal is to just spend every waking moment I can with my bride, but you know, I have goals for my students as well, and they're killing it. Oh my God, they're killing it. That ecosystem's just killing it. And by the way, if you're listening and you have an interest in applying to my Warrior program, text the word crush to 72345. Well, and that's so we help you crush it in this business. It's a little dorky, but text crush to 72345. But yeah, that program is extraordinary. And that's how you apply. And we don't take everybody, but it's like I say, we got about 1,200 students in that program, and as I said, they're at about 170,000 units that we know of. So really proud of it.
And I know they're crushing it because I personally listen to your podcast, and I know you have a ton of your students and guys from the Warrior program on there talking about quitting their job and building their portfolio. So for everyone that's listening to the podcast that hasn't listened to Rod's, definitely go give it a listen. Give them a follow, and I think
go to rodspodcast.com. It's on my link tree too at Rod's links. But anyway, yeah,
and we'll link it down below. And I think this is a perfect transition to the next segment of the show that we call the Big Four. James, take it away, sir.
All right, Rod. I want you to tell our listeners something that you've done in your life that is a cheat code for building wealth.
Every morning, I sit in my recliner and I do gratitude. I thank you, God, for my beautiful wife. Thank you for my kids. Thank you for my coaching students. Thank you for my foundation. And then I do gratitude for the things that I want as if I already have them. And I've got my vision boards there. And sometimes I'll get grateful for things. I'll get emotional being grateful for things I don't even have yet. And I know I lost some of you analytical ones on that, but this is how I had 50 million to lose and how I got it back. So ignore it at your peril because it freaking works. Trust me. So there's one.
Love it.
I love that. Love that. All right. Question number 2, we call resources. So are there any particular books, podcasts, or people that have really shaped your mindset, your journey that you haven't already mentioned on the show that our listeners would benefit from for going and checking out?
If you don't listen to Joe Rogan, then big mistake, because the guy just tells the truth, period. And if some of it you may, depending on what camp you're in, you may not believe, but it's all truth. And I love his show. I listen to it when I ride my bike around. Listen, my love language is gifts. And there's the book called The 5 Love Languages. I'm blessed to have that author on my show because I've given away literally a couple thousand of his books. Get that book. But because my love language is gifts, I buy gifts for my students. And some of the books that I buy for my students one is The Slight Edge, about those decisions you make every day. They don't mean much that day, but over time, they either traject your life up or down. Great book, The Slight Edge. Another one is Turning Pro. Steve Pressman is the author of that, about becoming a professional instead of being an amateur. Everybody starts as an amateur. Turning Pro. Gary Keller's One Thing. I had Jay Papasan, his co-author, on my show. That's a great book. Hal Elrod is another person I've been blessed to have on my show, The Miracle Morning. So there's a few books. Podcasts, like I said, Joe Rogan. Yeah, I think I answered. Yeah.
Perfect.
Absolutely great. Absolutely great. James, number 3.
All right, Rod, I'm going to let you get creative with this one. What does your life look like 5 years from now, either on the business side of things or on the personal side of things? Like where is Rod in his life? And I'll let you take it from there.
That is actually an exercise I have my students do. If you come to my boot camp, okay, you come to my boot camp in September, you will laugh, you will cry. I promise you both. And you'll be so freaking juiced, you'll be coming out of your skin when you leave. But that's an exercise that I have my students do there. Tell me your perfect day 5-10 years from now. And so my perfect day would be get up, go out to the porch on my guest house. We ride on the bay and watch the birds and the boats go by. And I used to make fun of bird watchers. I've become a freaking bird watcher, but with my wife, just spend time with my wife. Then I would go probably have lunch with one of my kids. They will both live here locally then. One is in Denver right now, but they'll both be here. Spend time, in my foundation. building schools in third world countries, spent time, helping my students, just overseeing my organization and the people that are running it, and have dinner with my bride, maybe watch a movie, and the perfect day for me would be a lot of time with my family. So.
Love that.
Love that. Love that.
And
All
why
right,
that's
Rod.
so important, why that's so freaking important, is the clearer you can get on that vision, which is, I love the fact you guys asked that question for your listeners. The clearer you get on that vision, it pulls you into it, which is why I have people do it at my boot camp. You get very, very clear on what you're looking for. It actually pulls you into it. Awesome job, guys.
Thank you so much. Thank you so much, Rod. And number 4, I know you've mentioned it multiple times, but for our listeners that feel motivated, educated, and inspired by you, want to follow along with what you're doing, listen to your podcast, check out your books, where's the best place for them to get in touch with Rod?
Rod's links for sure. Rodslinks.com. It's got my my boot camp site at the top. Remember, use the code REAL to attend for $197. It's not a sales pitch for 3 full days of training. You'll love it. But my podcast is there. I hope you'll check that out. Some of my social media is there. If you ask me a question on any social, I answer every single question. So people are blown away. And then they're like, is this really you? And I have to send them a picture, like this with my hands up and stuff. But it is. I just love it. And I'm very, very fast at it. So I'm able to handle questions. And in my goal setting workshop, for God's sakes, if you can't come to my boot camp in September, if you come in, you don't really need to do it, because we will do it there, and it'd be very powerful there. But if you can't come, for God's sakes, go do it. Go and have your spouse do it. Have your kids do it. Trust me, you'll thank me. It's super powerful. So Rod's links.
I can attest that he does answer his Instagram DMs, because right before we filmed this, I told him, I said, I reached out to you in January 2021, and he responded back for sure. So go follow him on Instagram. Go check out Rod Links.
Thank you. And if you're driving, hold on. If you're driving, text the word links, LINKS, to 72345, and we'll send you that domain so you don't have to remember it.
That's right, guys. All right, you guys know the drill. If you like this podcast, if you hated this podcast, do something and leave us a review. Send us a DM, Google, Apple, Spotify, YouTube, like the video, comment, do us something. James and I are doing this for free to add value and help you guys out. And all we ask for payment is that you guys let us know how we're doing. And with that, we'll catch you next time. Peace.
You guys.